Welcome, everyone, to today's IncoTerms 2020 webinar, What's New for the Decade. My name is Rick Bridges, Vice President, Roanoke Trade, and I'm your moderator for today's event. Our presentation is scheduled to run for 50 minutes with an additional 10 minutes for questions. And after you have listened to the presentation, feel free to respond back to your Roanoke representative with any questions that you might have, and we'll make every attempt to answer those questions for you. Before we start, I want to introduce today's presenters who are jumping in at the last minute. I do thank you both for being flexible and making the time to cover this very important subject. Okay, Pam Holdrup is founder and principal of Proven Logistics Solutions, PLS, where since 2010, Pam has provided practical consulting and training services in all areas of the logistics and supply chain to clients. Notable accomplishments include appointment to the Houston District Export Council, member of the Project Management Institute, and member of the International Compliance Professionals Association. Pam was certified in Paris by the International Chamber of Commerce as IncoTerms 2010 Master Trainee, and most recently certified trained by the ICC to IncoTerms 2020. Welcome, Pam. And Cheryl Fee is also founder and principal of Proven Logistics Solutions. Cheryl has an extensive background in all aspects of logistics and freight forwarding management in her roles at Fritz, WTS, and Agility. Cheryl serves on the board of directors of the International Transportation Management Association and contributes as a speaker for Houston Community College, the University of Houston, and international transportation-related organizations. Cheryl is certified and trained by the ICC to IncoTerms 2020. So welcome, both of you.
Thank you, Rick. Thank you.
And as we move along through the webinar, and just let us know when you want me to advance the screen, we can do that, and I'll let you guys take it away.
Thank you, Rick. My name is Pam Holdrup, and we're happy to step in to help our friends at Roanoke. You all have been valued partners of ours throughout our international logistics career, so we're very happy to help today. PLS provides training in all areas and consulting services, but I have to say for the last 10 years, IncoTerms has been one of our most popular courses. And with the changes in 2010, which were pretty extensive, and now the changes for 2020, we find that a lot of our clients and their clients still have a lot of misunderstandings. So I think it's a great program for you all to offer to your clients today, and let's get started. So for those of you who are familiar with IncoTerms, you might not know that it's short for International Commercial Terms, and that is exactly what they're in place for, is to help all of us that are involved in commercial transactions for the shipment, sale, transportation of goods around the world. The ICC is the International Chamber of Commerce, and they are located in Paris, headquarters, but they have affiliates and members from all around the world. They're the largest non-governmental entity in the world, and all of those members give feedback to the headquarters in Paris on what's happening in trade in their areas, and the headquarters accumulates all that information and tries to find ways to make our trading processes more efficient. So you'll find in the IncoTerms rules about every 10 years they need to be changed so that these changes in trade practices and regulations can be reflected in how we do business together. So just remember as we're talking that IncoTerms are rules, they are not laws. But when you write them into your contracts, your purchase orders, your sales agreements, they become a part of that contract. So what is written in IncoTerms rules becomes part of your contract. So the verbiage, the details of the rules are important because when you're agreeing to a sales contract or a purchase agreement, those details are part of your contractual obligations. So they are important. So basically, these three little letters that we're familiar with as IncoTerms rules are part of a big, extensive, detailed list of obligations for a buyer and seller, but by writing those three little letters into our agreement, we don't have to then write all of this verbiage into our agreement. So let's move to the next slide and see what these obligations are. Generally, in IncoTerms rules, the obligations are divided into three areas, and we have those highlighted in some of the slides you're going to see as green arrows for cost, money, and that's basically just defining what the cost each party is responsible for. So is it the cost for transport, the cost for packing, for unloading at destination, for loading at origin? Those actions all have a cost, and the IncoTerms rule defines which party, buyer or seller, is going to pay for those. It also has a vast list of just general obligations on who's doing what, either the buyer or the seller. So that is who's going to organize the transport, either the pre-carriage local transport or that main carriage international or long distance transport, and who's going to purchase insurance, and who's going to arrange and take care of customs clearance if it's an international shipment. So there's a long list of things that happen in a logistics chain, and those are spelled out in IncoTerms rules as to obligations for responsibility to arrange that, whether it be the buyer or the seller. So that's pretty important. And the main thing, risk, which we denote with a red arrow, is naming the point in the transaction that the risk of loss or damage of the goods passes from the from the seller to the buyer. And that's a pretty important point. It doesn't really matter too much if nothing goes wrong, but we all know, and we've all probably had experience, unfortunately, that things do go wrong. And when they do, it's important to know who's responsible to make that wrong right. So Rick, if you would advance. So this point that we're talking about in IncoTerms is called the point of delivery. And some of us get confused about that because we think of delivery as a physical thing. You think about someone comes to your door and they are delivering a package, and they have that package in their hand and they physically hand it to you and you take delivery. Well, that's how it works in the physical mode, but in IncoTerms rules, that point could be the point where the seller hands the goods over to the buyer, but it does not necessarily have to be that point. And in fact, in many of the IncoTerms rules, it is not the point where the buyer actually physically receives the goods. So just remember, this point is pretty important. All throughout the IncoTerms rules, the drafters specify over and over and over to be certain to name a specific point and place in your transaction. So for instance, if we're taking an IncoTerms rule, say FCA, and I am the seller and I'm selling to you, the buyer, and you say, I would like to buy these goods from you, FCA. And what point or place are you talking about as a buyer? If you don't specify as a buyer the point and place, IncoTerms rules specifically say that I, the seller, can pick the place that best suits my needs. So, for instance, we had a large warehouse where we received goods for our clients, and we expedited the goods from the suppliers to our warehouse. So we would call a supplier of goods for one of our customers, and there would be a purchase order that might say FCA, the suppliers, and the supplier's name, ABC supplier, but not name a point or place. That supplier name and address on the purchase order was in Houston, Texas, but that point was not named in the purchase order document alongside the FCA rule. It just said IncoTerms FCA, ABC supplier. So when we called the supplier to collect the goods from them, the supplier said, oh, those are coming from our Australian facility, because they, the supplier, get to pick, and that's where they wanted to supply it. So our client, who was expecting to pick the goods up in Houston, Texas, now is responsible to collect them in Australia. So you can imagine the difference in cost and time involved in that kind of a transaction. So it's very simple when you make your sale or your purchase to name the point in play. So in the example I just used with a supplier, I would name not just Houston, Texas, USA as the FCA delivery point, but I would also name their street address, because some suppliers have many locations in a city as large as Houston, and we want to ensure that we know which location we're receiving it from. So point and play, super important. That's one of the main things you need to remember when you're dealing with your IncoTerms rules. Rick? So let's talk a little bit about the IncoTerms last revision from 2010 and the new one, the revision of 2020, which went into effect January 1st of this year. So we talked about the rules need to change because things are evolving in global trade. And according to the drafters of the 2020 rules, their main focus was to make it easier for users, that's you and me, to select the right IncoTerm rule to fit their contract, to fit their need. And, you know, you think about James Covey, the 7 most important traits of a highly effective person. One is to begin with the end in mind. So that's exactly what we need to do when we're thinking about which IncoTerm rule fits our situation the best. So we want to think about what we as a seller are good at. Are we good at arranging freight? Can we arrange freight more economically than the buyer can? Are we here local and at the origin we can arrange the export clearance formalities better than a buyer that's sitting in a foreign country? As a seller, can I clear goods through a foreign country? Am I good at that? So we need to kind of look at what the needs of our specific circumstance are and make sure that we see what the obligations are for the seller and for the buyer and pick the one that best fits our need and also fits the reality of what we're doing. If we do that, then it makes it easier for everyone along the logistics chain to do their job correctly, and it makes for a happy relationship between a seller and buyer because there aren't so many obstacles and hassles, and we can do more business. So in their effort to help us pick the best rule to start with, they added more introduction information. So there's a longer introduction in the new rules, and we recommend you read it. It's good reading, and it's got a lot of verbiage, just really practical information to help you select the right rule. There's also a better explanation of how you align the IncoTerms rule obligations with the obligations that are in your contract of insurance and your contract of carriage. You know, if your insurance is calling for warehouse-to-warehouse coverage, but your IncoTerm rule is saying you're only covering the ocean transport, that's kind of a misalignment, yes? If you have an ocean freight contract that includes loading and unloading of a vessel, but your IncoTerms rule says you aren't responsible for loading or unloading, or if you're the seller arranging the carriage and you're including loading and unloading, you want to make sure the buyer is not also planning cost for that. So it helps you align all your related contracts more easily. They also updated what they call explanatory notes, which is in the beginning of each of the 11 IncoTerms rules that, again, just directs you to things like don't use this rule if, or do use this rule if. So it just, again, helps you select the right rule. And the last thing they did is a reorganization of the seller and buyer articles. And what the articles are, just to remind you, is it's really a list of obligations of the seller. That's called the A articles, and for the buyer, called the B articles. And it's just a list that goes through each of the 11 IncoTerms rules. The articles are in the same order in each rule, and they have things like general obligations, transfer of risk, who arranges for the carriage, who arranges for the insurance, what delivery document you use, etc. All they did was reorganize those articles in a different order to put what the ICC considered to be the most important ones that a seller and buyer want to consider first at the top of the list, and then added things like all the costs we need to consider as the last article. And we'll look at that again in a moment. So some of the other changes that came through 2020 that we just want to mention is the first one is DAT. It was new in 2010 and it's gone in 2020. DAT stands for Delivered at Terminal, and now that's been replaced with Delivered at Place Unloaded. So there's no more restriction to that place being a terminal. It can be any place. FCA, which is a rule that we've had for quite a long time, free carrier. It has some additional verbiage where if the buyer and seller are trading with a letter of credit. So as you know, as a seller, if you have a letter of credit, that means that you're going to get paid. So that's great. As a buyer, it means that you're going to get the goods you ordered. So there's a bank in the middle helping organize all that, and the seller, in many cases, has to present on-board bills of lading with their letter of credit documents to the bank to get paid. Once the documents are received, the bank pays the seller and then sends the documents to the buyer so they can collect the goods. So there was a problem with FCA because the buyer is the party responsible for arranging the freight. So they controlled those shipping documents. So now there's just some verbiage in the IncoTerms rules that say if the parties agree, the buyer who's arranging the freight must tell the carrier to release the original documents to the seller so they can then present them to the bank and collect their money. And then the buyer gets the documents back through the banking channel. That's new. A little protection if letters of credit are involved or payments through banks are involved. The next is insurance, and insurance is addressed in only 2 IncoTerms rules, and I think that is really still so strange because in all of the rules except for 2, it says neither the seller nor the buyer have any obligation for insurance. But we all know through experience that insurance is an amazing, inexpensive, great way to mitigate risk. So in the IncoTerms rules, they have required in 2010 for the 2 that there is obligation on the seller's part to provide insurance. It was the lowest level of insurance called Clause C, or more of the catastrophic things that happen. It did not cover anything for more common risk. And they have changed that in 2020, and Rick's going to talk to you all more about that as we go along. The next thing is arranging for carriage. They added verbiage that when the seller or the buyer are responsible for arranging carriage, that they may use their own transport. That kind of went without saying to start. We all thought that they have specified that now just to make it clear. If the seller arranges for carriage, it may be their own transport, their own trucks, their own ship, etc., and the same for the buyer. Security-related requirements were just reorganized a bit, since 2010. That was the first time security requirements were input into the IncoTerms rules, and there were certainly a lot of changes that happened the 10 years prior. But even since 2010 up until today, we all know that every transaction that we make on an international or even a domestic transport somehow requires some kind of security information. So IncoTerms rules, this new 2020 version, just adds some additional verbiage to that. So for carriage, arranging carriage, if there are requirements of the carrier that the seller or the buyer has to assist the other in providing that. I think about things like your import shipments by ocean that need to have the importer security information, the elements provided before the goods can be imported. So you need information from the actual seller overseas as to information about what they loaded in a container and when it got loaded on the ship and such, in order for you as a buyer to even import it. things along that nature. So those are mentioned now in Article A4 and Article A7, where we talk about import and export obligations. And then costs. Costs are a big part of what we do, right, in international and domestic sales, and the new rules have organized those into a list to make it easy for the buyer and the seller to see what they're responsible for. And it's really great for freight forwarders too, because when you're helping your clients with quotations, you want to make sure that you include all the costs that your client is responsible for, but you certainly don't want to include any extra that would possibly cause them to lose the sale and you to lose a shipment to handle. But we also don't want there to be any gaps. We want to make sure there are no surprises either. So in Article A8 and B8, the IncoTerms rules have been expanded to include the cost, a list of costs. Rick? Packing is something that was clarified just a little. You know, packing is kind of a gray area. It always has been in IncoTerms rules, but it kind of has to be. The rules have to be written that they fit any situation, but they can't fit every situation perfectly, right? So packing is a bit of a subjective word. You know, what I consider to be sufficient packing and what you consider to be sufficient packing could be different. It sort of depends on our area of our mindset about risk and, you know, how comfortable we are in that arena. So in the IncoTerms rules, it used to say in 2010 that the seller may package the goods in a manner suitable for their export. For their transport. So what does that mean, suitable for their transport? And did the buyer tell the seller how they're going to transport it? Is it, you know, going to go on an ocean vessel, an aircraft? Is it going by truck? Is it going in the middle of the desert, in the middle of the Arctic? You know, what is the transport that is going to happen on this sale? Does the seller have that information to pack it sufficiently? So we always encourage the seller and the buyer to have a really good conversation about that before the agreement is finalized. The seller knows the goods the best and how they need to be protected. The buyer knows the transport of the goods, where they're going, what the conditions might be. They need to have a good conversation about what appropriate transport packaging is. So in 2020, the words were just changed a little bit to say that the seller must, not may anymore, it's a must, pack and mark the goods in a manner suitable for their transport. So again, we always encourage best practice. Decide what that means to you as a buyer and seller so you're on the same page going forward. So just quickly, some things that stayed the same in 2020. We still have 11 rules. We had one that was changed, but not any that were done away with and not replaced. DAT was replaced with DPU. We still have the rules in 2 distinct transport categories. Out of the 11, we have 7 that can be used for any mode or any combination mode of transport, and we have 4 that can only be used on sea or waterway. The rules are still applicable to domestic or international or any kind of relaxed border formality. So if you're in the United States, we recommend you're doing domestic purchases and sales, use IncoTerms 2020 and use them for your international sales or purchases as well. Then your departments, your team don't get confused by trying to use terms or rules that are good only for transactions between our 50 states, domestic. The IncoTerms rules have domestic and international so that we don't get confused. There's still no ships rail. That went away in 2010, meaning for the 3 rules that require a seller to place the goods on board a vessel, those rules have stayed the same. The term is not on board, meaning when the goods crossed over the ship's rail, which is the way they were prior to 2010. But in 2010 and still in 2020, there is no mention of a ship's rail. The goods are delivered according to IncoTerms by the seller in these 3 rules when they are placed on board the vessel. And placed on board the vessel is a little bit gray area too, so depending on what your commodity is, you might want to have some clarity in your contract as well. So placed on board is meant to mean by the drafters when the unit or the piece or the goods are first placed on the ship, whichever, and unhooked from the rigging. If the goods then have to be shoved around, moved around inside the hold of the vessel, that is after delivery. If the goods have not been unhooked, it's before delivery. So they're placed on board and unhooked. If you have grain or you have bulk cargoes, you have roll-on, roll-off cargoes, you might want to just clarify a little bit in your sales agreement that you and the buyer, seller and buyer, are on the same page about when the goods are considered placed on board. Electronic records are still allowed in IncoTerms 2020. They just state that the goods or the documents can be provided in an electronic format if it's generally accepted or if both parties agree. Terminal handling charges have not changed in the way they're addressed in 2020 either. They still are a challenge because even we know in our ports here in Houston, they even handle terminal handling charges differently. So obviously, all around the world, ports handle the charges differently. Sometimes the charges to move within the port are included in the ocean freight charges. The carrier pays those, and they include them in their freight charges. Sometimes the port or terminal will bill those either to the deliverer, the seller, or the collector, the buyer. So they are still addressed that either the seller or buyer pay, but for instance, on some of the rules where the seller arranges the main carriage, so the contract with, say, the ocean carrier to move the goods from the port of origin to a foreign destination, it says the buyer is responsible for the terminal charges at destination unless they are included in the seller's contract of carriage. So that's how they're addressed in IncoTerms rules. And we still have string sales, and those are not the sale of string. They are just a way to address sales that happen throughout the life cycle of a transport. So say goods that are transported in a pipeline may leave a facility, and as they transport across miles, they might be bought or sold several times. And the same if you consider a tanker of some, say, oil. By the time it leaves port and, it's delivered, those goods are delivered at various spots, the goods could be bought and sold many times. So the seller originally has documents, but not all the buyers and sellers in between. So it's addressed in IncoTerms rules. One thing that's also not addressed, the drafters looked at it, something that's new, this verified gross mass, which is the weight confirmation for containers. It's a safety precaution that we're aware of. This is new since 2010, right? But the drafters looked at it and decided that it's a little bit too complex to tie down black and white in IncoTerms rules. So what they basically just said is, Rick, is in the IncoTerms rules, Article A4 for carriage says that the seller must, remember it's not a may, it's a must, provide the buyer with any information that the buyer needs for arranging the carriage. So if it's a rule that says the seller's delivering but the buyer's arranging that ocean freight, then the seller's obligated to get the VGM certificate so that the buyer can make the shipment. Rick? So we just wanted to show you the new book. This is what it looks like, and we've already talked about the introduction, the explanatory notes, and we just wanted to mention one more thing here, and it's at the back of the book, starts on page 135, and it's new. It's an article by article text. And, you know, at first we were thinking, well, okay, that's nice, but we don't really need that. But it is a really nice outline, and having used the book now for the last few months, I see a lot of value to it. So if you're a seller or a buyer trying to maybe figure out which rule might work best for your particular transaction, if you're a freight forwarder and you're trying to advise your client to help them select a rule that would fit what they want to do, it's a really good way to look at it. So for instance, if I wanted to look at Rule A4 for carriage, that's who arranges the main carriage, either the seller or the buyer. And I'm thinking, well, I am the seller, I don't really want to arrange the carriage, I'm not so good at that. I can look through the long list, the 11 IncoTerms rules all in one place, and just go through very quickly and read, seller has no obligation to arrange carriage, seller has no obligation, seller must contract for carriage, and I can easily pick out the rules that I don't want to use, and helps me make a selection. So that's a new part of the book, and that is a really nice added feature in our view. So here are the rules, just so you can look at them. They are exactly the same as they were in 2010, except for DPU here that you see on the left of your screen. So these 7 on the left are for any mode of transport. So that means even if you have a shipment by vessel or on a barge, you may use these. If you have a multimodal shipment where a container carrier is moving something by rail to load on a vessel in another port, these are perfect. But we also have 4 that can only be used for water. So if you have a ship and if you have a barge, you can use these, but they aren't always the best choice to be used. And Rick's going to talk with you a little bit about those as we go forward too. So we thought, well, we're revamping the rules. We're trying to make it easier to pick the right one. Why do we even need these then? If we can use all 7, why do we need these 4? But when you look at these 4, they're some of the most widely used ones globally. So for the ICC to take these out of the picture, it would be disruptive to trade. Think about customs. When you declare things for customs, they want to see that CIF value because they want more duty and taxes, right? If they took that out of the mix, it would be disruptive. So I think, we might see over time some of these change somewhat or maybe slowly disappear, but not this year, not in 2020. So this is just a little pictorial of what these articles were that we mentioned to you earlier in 2010 and how they've been reordered in 2020. And the next slide will show you what they look like to make it a little easier. Rick? So here they are. These are the obligations that are the same for each IncoTerms rule. Like whenever I'm looking at an IncoTerms rule, general obligations will always be first. And general obligations is one that happens to read the same for every rule. It just basically says the A1 article says the seller must provide the goods in a commercial invoice as per the contract, as per the agreement. It says they can provide things electronically if that's normal or if both parties agree. And on the B1 article, it says the buyer will pay for the goods as contracted. So that's pretty much it. But for each of these, they may have changed verbiage based on which IncoTerm rule you're looking at. So things like taking delivery, that delivery point we talked about, will certainly be different for the 11 IncoTerms rules, yes. Transfer of risk is always the same. All those articles A3 and B3 say is that risk is going to transfer at the point that's named in A2 or B2. That's always the same, and so forth. So when I'm looking for allocation of cost and I want to see as a seller what I'm responsible for, in every IncoTerm rule, I'm going to go to A9 and I'm going to look at that list. So this is a good way for you to check your quotations, check your contracts, check your agreements to make sure that all the costs are accounted for and that the ones you are responsible for you're considering and not anything extra. Rick? So just a little review of our IncoTerms rules cover so many things. These are things that we do not have to write detail for into our agreements because these three little letters spell it all out for us. But they can't cover everything. So here on the left side there is a list, and we're not going to read through all those for you, but just want to sort of point out the top one and the bottom one where we find the most misunderstandings from companies that we work with. And one is IncoTerms rules do not address ownership of the goods or when title passes from the seller to the buyer. Some companies write that when this delivery point in IncoTerms, when this risk passes, that is when title passes. But it does not have to be that way, and it is not that way with many companies. Title passes, ownership passes at different points, and some people say it will never pass until you pay me. And IncoTerms rules have nothing to do with payment. So you can see that while IncoTerms may say that I'm delivering the goods to you when you bring your truck to my warehouse and I load it, but I'm not giving you title until you pay me. So that's why title cannot be addressed in IncoTerms. And then the last one is also a big one that's misunderstood, and that is by your accounting departments, your finance departments, and that is when revenue can be recognized on your books. Here in the U.S. we have the GAAP rules, the generally accepted accounting principles that say we have to treat revenue recognition the same for transactions. So we have a lot of different options with IncoTerms rules, so that doesn't always work well. So just remember when you're looking at revenue recognition on your books that the IncoTerms rule is not really what you need to look at. That should not be a determining factor when you select the IncoTerms rule. On the right side here of your screen, you can see all the things that are covered, though. So all the things we've talked about, who's doing what, who's paying for what, when this delivery occurs, who's going to arrange for insurance, who's going to do export and import clearance if we have an international sale, and how all these costs are allocated. And then all important for us, we know we can work so hard to build a machine, deliver it, and get it to the customer's foreign destination as quickly as we can to make them happy. But if those darn documents aren't correct and they aren't in place in the right location and with all the detail that's needed, that nothing's going to happen. So the documents, who's responsible for them, who's controlling them, is really an important part of IncoTerms rules. Rick? So here we just wanted to give you a quick comparison of how the rules work. We don't have time in this webinar to go through all the details that you need to think about, but we wanted to give you a really good overview here. So these rules here, Ex Works, free carrier, free alongside ship, and free on board, or what we call the pre-carriage rules. And if you can see on the pictorial these little arrows that we've been talking about, we see the seller's location on the left, and we see the buyer's location on the right. And then there's some depiction in between that sort of shows some of the actions that happen between those 2 points. The arrows represent the cost, the transport, and the risk transfer from the seller to the buyer. And you see with Ex Works, those arrows are very near the seller's facility. So Ex Works is one of the common rules that's used, but it's also the most commonly used and correct rules. So think about Ex Works. It has a place, but it really has a limited place. When you read the rules, the guidance notes or the explanatory notes in the new IncoTerms 2020 that are in front of the Ex Works rule, you'll see that it says don't use this for international shipments, because Ex Works is unique in that it's the only rule that says the buyer is responsible for export clearance obligations at the origin. So I'm a seller, I'm in Houston, and I'm selling to someone in Saudi Arabia, a buyer. If I sell Ex Works, it says that my Saudi Arabia buyer is going to take care of all the export formalities to get these goods out of the United States. Well, do they know how to do that? Are they able to do that? And do they know how to do it correctly? And what's the impact if they don't? Well, in the United States, which is the same in many countries, there are laws, not rules like IncoTerms, laws that say the U.S. exporter has certain obligations. And as an exporter, I want to be sure that if I'm responsible for this action, that I'm taking care of it, not a company in Saudi Arabia that may not know what to do. So Ex Works, where the buyer is responsible for export clearance, is a problem. The other thing that Ex Works says is that this delivery point, remember, the delivery point where risk passes from the seller to the buyer is when the seller places the goods at their location, the named location of their warehouse that you see here in the picture, ready for collection by the buyer. So all the seller has to do basically is put it on their shipping dock and say, here it is, come and get it. According to IncoTerms rules. Remember, the seller still has these export regulatory compliance issues they need to worry about related to exporting goods from their country. The IncoTerms rule doesn't take away that legal obligation, but in IncoTerms it says the seller must deliver the goods by placing them for collection by the buyer. So who's going to load the truck? When we send a truck to this supplier's location, we as the buyer send our truck in to pick the goods up. Does that warehouse let our driver get out of the truck and operate their forklift and load our truck? No, that would not happen. There might be a few rare instances that might happen, but generally that's not going to happen. So what happens as a buyer if the seller tells me these goods are ready today on their loading dock to come pick up, and I have, say, in our agreement, 7 days to come and pick it up, and on the third day something happens at the seller's location and they damage these goods, whose problem is that? According to IncoTerms, delivery happened when the seller placed those goods on their loading dock and said they're ready, come and get them. So I'm the buyer, but I'm responsible for damage that happened at my seller's warehouse by their people. I mean, that's crazy, right? But that's what IncoTerms says. So now we have a mess. We have a seller and a buyer that are not happy, and the buyer is trying to explain to their finance department why they still have to pay for these goods and they never even collected them yet. So just be sure that you select an IncoTerms rule that fits what you're doing. We know that when a seller is providing goods in a warehouse on their loading dock, that they, in most every case, intend to load that truck. When a truck's sent in to pick up goods, that they are going to load the truck. So we want to pick a rule that requires the seller to load the truck. So Ex Works is one that is used because a lot of times salespeople think it's easy. I don't really have to do much. I can, just make these goods ready here at our warehouse and I'm done. But you can see there's a compliance, legal compliance for export formalities issue, and there's also who's going to load the truck issue. Sometimes we've seen customers say, don't worry, we load trucks every day. We'll load the truck for you. And even perhaps we'll deliver it for you to maybe your freight forwarder's location here across town. We, have trucks out every day. We're a seller. We want to make you happy, Mr. Buyer, and we will do that for you. The problem is what happens if something goes wrong. I'm a buyer, and I think, well, that sounds good to me, but I'm a buyer without control. So now I have risk of that truck being loaded by the supplier. I have risk while that truck is being delivered, say, to my freight forwarder, because the risk passed to me, the buyer, when this supplier made the goods available on their dock, loading dock. So think about what you want to have risk for, and if you have the risk, wouldn't you prefer to have the control? That always puts you as either a seller or a buyer in a better position. So we say, in Texas, if you've got an old drilling rig stacked in a field out in West Texas and you want someone to buy it, you can sell at Ex Works that field in Texas, and that buyer's responsible to come and get it, load it up, whatever cranes, winch trucks, anything they need to bring with them to load it and take it across the U.S. to drill. That's fine. That's a good Ex Works sale. If you have a domestic sale and it's a very small package, and the driver can go inside and actually collect a small package from a reception desk or something, and it's a domestic sale, then that would work. But otherwise, leave Ex Works behind. What we do recommend that fits what we just talked about much better, and it's my personal favorite rule, is FCA carrier. And you see it here with two sets of arrows. And this is a rule that you actually have an option. The seller in FCA is responsible to deliver the goods at this named point or place. If the point and place is the seller's premises, so I'm the seller, it's at my warehouse, it's my street address, my city, my state, listed as the FCA point, then I, the seller, am responsible to provide the goods at that location loaded onto the buyer's truck, so the receiving carrier. So the buyer is responsible for sending the truck in. I am the seller. I'm responsible to provide the goods at that location and load the truck. So isn't that great? That fits exactly what we talked about earlier. So if something happens when that truck is being loaded or while those goods are sitting on the loading dock, it's very clear the seller's responsible for that. There's not any gray area or any confusion or awkward position between the buyer and seller. The other option with FCA, which is awesome, is that the named point can be, say, a freight forwarder's consolidation location. It could be an airport. It could be the port where the seller is responsible for delivering the goods to a named point or place. And that point or place is at the origin side. So this is usually a short carriage. It's usually not a main carriage that would be across the country or international. It would be delivering to whoever the main carrier is. So that's the airline, the railroad, the ocean carrier. The seller in this case is responsible for delivering the goods to the named point or place, so let's just say the airport, ready for unloading, and that fits the circumstance as well. When we get to the airport, the driver doesn't get out and go get a forklift from the airport terminal and unload the truck. No, he brings his truck, he brings his documents, and the airport terminal operators unload the truck. So it fits what we're doing. So we always say be careful to think about the physical handling of your goods, the operations, and pick the rule that fits those. The next is our first water transport rule, FAS, free alongside ship. So that S means ship, so you can't use it if you don't have a ship or a barge. And then below it, free on board. Free on board a ship. So again, you have to have a vessel or a barge in order to use these two rules. They won't work otherwise. And you see the arrows here. The seller is responsible to deliver the goods with FAS free alongside the vessel. So that's a bit of a problem because in reality, when we deliver to a port, we're usually delivering a few days in advance of a ship, and there are other ships that are working there at that dock today. But I'm delivering today for a ship that's going to work next week. So they don't put my freight directly alongside that vessel because there are other operations going on there. My freight will be put in a staging area for my ship that's loading next week. The same thing happens when you deliver containers. You don't deliver alongside a vessel. You deliver to a container yard where the goods are staged until that ship comes in. So when we deliver alongside ship, the seller's responsible up until that point. But the seller, in this case, is not selecting the ship. The buyer's responsible for the main carriage. They pick the dock. They pick the port, they pick the ocean carrier, and it could be the worst terminal ever. And I, as a seller, have to deliver there because I have to deliver where the ship is, and my risk is not relieved until my freight is physically alongside that ship. So I'm at a terminal I didn't pick, with a carrier I didn't pick, and maybe I'm waiting for a week, and something could happen to my freight while it's sitting at that dock waiting to move alongside ship. I have risk that I have no control over. So you have to think as a seller, is this really the rule that I want? Do I want to be FAS free alongside ship, or would I have been better to select free carrier, the rule above? Still name the dock and the ship that I'm delivering to. I'm delivering to the very same place, but as a seller, my risk ends when my truck pulls up with all of the paperwork. It stops then, and then the buyer is responsible for arranging and for any risk involved as they unload those goods from my truck. So why would I pick FAS if I could pick FCA as a seller, right? And the same with free on board. It's the same principle, except even more risk and confusion for the seller, because as a seller, I have to now deliver on board a ship that I didn't select, with a carrier I don't know, and a port I might not know. I have to work very carefully with a buyer to even be able to do this. And there's a cost to load the goods on board the ship. Somebody's going to have to pay for that ship to lift it and put it on board. So if you're familiar with ocean shipping, you know that many of the regularly scheduled services, we call them liner services. They call the same ports of origin and destination over and over and over. Those carriers have really great working relationships with those terminals. They've negotiated lower prices, and the carriers, provide a rate to whomever they're contracting with, the seller or the buyer, that's called a liner terms rate. That means the loading of the ship and the unloading of the ship are included in that price. So think about one of the largest carriers in the world, Maersk Line. We ship with them all the time. Maersk will almost always provide a rate that includes loading and unloading of the vessel. It's called liner terms rate. So now I'm buying from someone as a seller, and I'm asking them to quote me a price and be responsible to deliver on board a ship. Well, they have to include cost for that in their quote, right, and in their sales price. But I'm a seller, I'm a buyer, and I've negotiated an ocean contract that includes loading, so I'm paying twice. So just be mindful of that. And I know, Rick, I believe you have some comments you wanted to add to this too, because these are areas where people do get confused about how to select the best rate, the best IncoTerms rule.
Yeah, thanks, Pam. I mean, maybe just to echo some of your concerns, you'd think that the E and F terms are lesser risk to the seller, but there are some areas of concern. One of the pieces of concern that we see is really the Ex Works, as you mentioned, obligates the buyer to perform that loading, and in many cases, the seller is going to be doing that loading for the buyer. So in situations where there's damage that occurs during the loading, the risk is technically that of the buyer. So in terms of insurance, it's really the buyer's insurance that should respond, even though the seller caused the loss. So you can immediately see kind of the confusion there. And really, we recommend to kind of avoid that sticky situation that, perhaps the free carrier term may be a better solution in that case because it shifts the loading responsibility back to the seller. The other point that you had mentioned was the often misused or abused FOB term, really doesn't work well for containerized cargo because the containerized cargo risk transfer is really not at the onboard point on the delivery to the vessel. And for the same reason, the free alongside, the FAS term doesn't work, as the risk transfer on FAS occurs alongside the ship. So for containerized cargo, it's really cleaner to use a term that allows for the recognition of the handoff between the parties upon delivery to the terminal. So, FCA or free carrier again, would be the better term for that as well. So, great points on kind of the reason to give pause to the F and the E term. I did also want to kind of transition to more of a discussion on the risk side of things, so a little bit less of IncoTerms. And while IncoTerms does do a great job of identifying risk transfer, don't assume that the party on risk at the time of loss will be the only party with the financial loss. And I put up on the slides here really two scenarios. So you're shipping product on open account terms and relying on the buyer to insure it. My question is, what if they suffer a cargo loss and you, as the other party, as a result, are not paid? Alternatively, you're prepaying for goods and relying on the seller to insure it. The cargo's damaged and you don't get your cargo, or you don't get refunded for your prepaid amount. So it's really kind of looking forward at the payment terms as well, but really the solution here is contingency insurance, contingent cargo insurance. It's known by a whole host of other names, but in short, it's really a backup coverage to the failure of the on-risk parties to cover the loss resulting in the other party and they're being financially harmed. Offering the coverage, I think for freight forwarders, it's a great opportunity to provide an added level of service to the forwarder's client. And, it's something that might be missed in a lot of cargo insurance policies, but it probably does exist. And I would just urge everybody to check in with their Roanoke representative to kind of take a deeper dive on the subject and to familiarize yourselves with the opportunity to kind of cover that contingent exposure. Okay. So Pam, I'll hand it back to you on the D terms.
Okay, thank you. So these are the 3 D rules. They start with the letter D. We think of them as the destination rules, where the seller is responsible for arranging carriage, not just the pre-carriage now, but all the way to the place of destination. And you see our arrows have moved all the way to the right side of our screen now. So they've transited now to the destination area. So the seller is arranging the carriage, and they have the risk of the carriage. So you see the red arrow has moved to the right side of your screen too. So delivery at place is definitely a very popular rule, and we think about DAP to be used in places like a door-to-door container move. If you are responsible as a seller and you contract with, say, again, someone like Maersk on a door-to-door basis, then the place would be the buyer's door. Then this Incoterm rule fits really nicely with that kind of contract of carriage, right? So the goods are provided at the named place, but they are not unloaded. So just in practicality, when you deliver to, say, a warehouse, you, again, do not unload the truck yourself. The receiving location, in this case the buyer, would unload the truck. So it's a really nice fit for that area. So remember, the seller is now contracting the ocean freight. They are responsible for any risk that happens along the way, all the way to the destination. So the seller has control, but they also have a lot of risk, right? The new rule, DPU, is basically the same as delivery at place, but it includes unloading. So the place can be anywhere. It could be at the buyer's location, but not with any kind of import clearance. So it's kind of hard to depict it perfectly in every case, but delivered at place, unloaded. So we talked about Maersk Line and a liner term contract of carriage. So with DAP, I use the example, a door-to-door container, where we've contracted with Maersk to take the goods all the way to our buyer's door. If we don't, we're just contracting with Maersk to take it to the port of destination. Maersk is a liner terms carrier. Their freight includes unloading, so DPU fits nicely there, doesn't it? Our contract of carriage takes us all the way to the destination and unloaded. So again, this is a good fit in that example. The supplier, the seller has responsibility of loss all the way to this named place at the destination. And then the last one is DDP, delivered duty paid, which is sort of the granddaddy of them all, where the supplier basically does everything, including customs clearance at the destination. And we say again to just be mindful of this, because this is the only rule where the seller is responsible for customs clearance and all kind of import requirements at the destination. So can the seller do that? Are you positioned so that you know how to clear freight, say in Nigeria? Are you able to do that? Usually you have to have a tax presence, a monetary presence, so that customs knows that they can collect money from you. And there are certain types of exemptions and exonerations that you might not be able to take advantage of if you as a seller do that clearance. We had a customer that had a motor that needed to be needed to be tested, and the location was in Germany, and it was a very expensive motor. And so the customer said, I'm just going to ship it, I'm just going to get it over there. I'll take care of clearance. The testing facility really isn't good at doing that. I'll do that, and it's no big deal. And then I'll bring it back out again. Well, they did. They sent it into Germany to be tested, but the value was so high, their VAT, their taxes were $10,000. The VAT and the duties and taxes were $10,000. So when they got ready to export it, to bring it out after the testing, the seller, were not in a position to be able to be refunded those taxes. Had they been a local company, when they filed their taxes, they could have filed for an exemption on that since the goods were being exported. But since they were a foreign company, they were not eligible for that refund. So just be mindful of those things. So destination rules, seller has risk all the way to the destination and arranges for everything, transport, all the costs up to that named point or place, and with DDP, also customs clearance. Rick? And the last one is main carriage rules. These are the C rules, and we refer to them as the compromise rules, because these are the rules where the seller and buyer really talk about who's going to arrange for what, but also who's going to have the risk for that freight arrangement. So if you look at the arrows here, you see they're split. Our red risk arrow is split from the other two, and this only happens in these 4C rules. You can see at the top it says the seller arranges any pre-carriage, and they also arrange the main carriage to the destination. So we see our arrows are at the destination, the blue and the green, but our red arrow for risk transfers on the seller's side. So this is kind of cool. If you're a seller, maybe you can arrange the freight and you don't mind doing it for the buyer, and perhaps you can do it even cheaper than the buyer can, but you don't want the risk of the transportation. So this is where the buyer and seller talk, and the seller says, yes, I'll arrange that, but I'm not going to take the risk. So for instance, in the CPT rule, you can see here that our arrow stops at the seller's side in one of two locations. So if my rule is CPT, the seller's location, then I'm the buyer and I am going to expect to receive the goods, say, in Nigeria, but you, the seller, are going to load a truck to take the goods to the airport or to the port, but when you load that truck, seller, you have transferred risk to me, the buyer. That's an agreement that the seller and buyer make. Sometimes that point and place that's named is, say, at the airport or at the port, and that's why you see the second red arrow there. But once the goods are turned over to the carrier, right? So maybe it's a domestic move. It could be to the truck line. It could be to the railroad. It could be to the airport. Once the goods are turned over to the carrier, either at the seller's location or at another local named point, then the risk is passed. So the seller has arranged the further transport all the way to the destination, but they do not have the risk for that. And CIP is the very same obligation of the seller as CPT, except for also insurance. The seller, have to provide insurance. But the insurance that they are required to provide by IncoTerms rules is between the red arrow you see on your screen and the green and blue arrow. So from the point of risk transfer to the named point of delivery at destination. So you can see there's a lot of logistics on either side of those arrows that, according to IncoTerms rules, are not covered by insurance obligations. The seller's only required to insure between those 2 points, the point of delivery and the point of actual physical delivery at the destination. So that's something that Rick's going to talk a little bit more about too. And the same with CFR and CIF. These are our water rules. So again, these are when we must use a vessel. CFR says that the seller is responsible for delivering the goods to the destination and arranging for the transport to the destination. But when they turn the goods over to the carrier by placing them on board at the origin, the seller's risk transfer. So if something happens to that ship on the way to the destination, the seller arranged it, but it's the buyer's responsibility and the buyer's risk. And again, on this depiction, you can see the very small part of this logistics chain that is covered by insurance. The seller must provide insurance between the red arrow and the blue and green arrow, so only while the goods are on board that vessel. And there are requirements for a lesser amount of coverage, what we call the FCPA, the Clause C, or the catastrophic coverage only. So it's very minimal coverage. So it's very important that as a seller and a buyer, you're understanding what you're agreeing to and what your risks are in these situations. You know, IncoTerms drafters will say it's really good for you to think about as a seller to sell with a C rule, because you get to control the freight. You get volume discounts, perhaps. The more freight you book with carriers, the better rates you get. So you want to control the freight, perhaps, as a seller. So you want these volumes to add to your total so you can continue to get good rates. So you want to control the freight. You get those very important shipping documents that you can control. Remember, those are so important to be paid, to be able to collect the freight on the other side. Whoever controls those documents is in a pretty good position. And the best part about it, though, with the C rules, as a seller, you do not have the risk of that transport. So these are pretty slick. So IncoTerms drafters will say, consider selling the C rule. And likewise, what we talked about earlier with the F rules, where the seller has responsibility for the pre-carriage and the origin arrangements where they're located and most familiar, but the buyer takes care of everything else. They get to control the documents. They pick the ship or the aircraft or the truck. They say buy with an F rule, because as a buyer, you get the volume to control and add to your tonnage and such. So buy F, sell C are usually the first choices, and then between the buyer and seller negotiating, you might end up with something other than that. So, Rick, did you want to talk a bit about the difference in the insurance requirements with the new rules and with these?
Sure. And make some great points there in the sell C terms. I've always said to really with the C terms, you control your destiny as well. So you're controlling the insurance, the ability to understand what's in that insurance. And obviously, the insurance provider is on your side geographically and from a leverage standpoint. But you'll see, as Pam had mentioned, the big change for 2020 is this carriage and insurance paid to, the CIP term. And Roanoke was instrumental in getting the change through the comment period leading up to the IncoTerms 2020 revisions. And really the reason we did so was to help the shipper avoid the confusion on the level of coverage that Pam had mentioned. Most of the past reference was to minimum levels of insurance, which really translated to free of particular average, or in Europe, more commonly known as Institute Cargo Clause C terms. And that's really total loss only coverage, and even specific to the international voyage, the ocean voyage or the air voyage, and very limited in coverage. So the new term reverts to the level of insurance most shippers know and expect, which is the all risk or Institute Cargo Clause A term. And I'd also keep in mind, the much loved CIF term, as Pam had mentioned, does not incorporate that shift to all risk. So really, it's probably good practice for all of you to consider to make that shift to CIP for most commodities, aside from bulk goods or similar merchandise that doesn't need the all risk or Institute Cargo Clause A term. And I'd also just remind everybody that the CPT and CIP terms are multimodal, where CFR and CIF are really only meant for water transport only. So, Pam, I'm going to hand it back to you here for the closing. We're a little bit past an hour, so we're getting a lot covered in a short amount of time.
Well, thank you. It is a lot to cover in an hour, and we've tried to do that, but we just want to, just a couple little tips here just to remind you to look at your documents, look at your forms, make sure that you're referencing the 2020 rules, don't forget, and be sure you include them in all your quotes and contracts and such. Anytime you do not reference the rule, the year, then it's our understanding that it will reflect the year or the date that your contract was written. So if you don't say 2020, it generally is assumed it will be 2020 if there should be a legal action or something of that nature, but you want to be sure. Just as we talked about throughout, try to always pick the rule that fits the reality of your shipment. Make sure that you are matching your contract of insurance, your contract of carriage, your letters of credit with your IncoTerm rule. If everything should be aligned, it will work so much more smoothly for your logistics team. Make sure that you name the point and place. That's so critical, as we talked about, and it was such an easy thing to do. And make sure that you, the buyer and seller, are on the same page. And as freight forwarders, help your clients with that. These things are confusing, and there is still a lot of misunderstanding. And now I hope from your learning today that you'll be able to help others as well as your own companies. And if there are any gray areas, make sure that you discuss it and write it into the contract. And those are things that we talked about, such as packing. And you can see that it's important that all of us clearly understand the rules, so I think your time is well spent today. Rick, I just want to remind you to use the book, and it's available as an ebook now this year, so that's really lovely, through the ICC. Paperback from Amazon, it's about $60, so it's pretty expensive, but you need the detail. When something goes wrong or when you're making these fine decisions, you need those. The app is an awesome tool as well, free, and easily downloadable from Google or the App Store.
Yeah, thanks, Pam. I would second that on the app. It's really great. Again, it's free, and it's a great tool to kind of have at the ready. Instead of dragging the book around with you, I used to take the book everywhere I went. Now I've got it on the app. So I want to thank you guys again for doing a great job here and jumping in and keeping this moving. I know we had over 500 registrants, and hopefully all of them have a chance to listen in. So because we're not getting questions from the audience, I just had a couple general questions, hoping to get your input on. And certainly for those folks that do have questions after listening in, they can contact their Roanoke rep and get them up the chain to us, and we'll be sure to try and answer them. So, I guess the first general question is, what do you see as really the top issues with the use of IncoTerms?
Cheryl, do you want to take that one?
Yes. I would say the top issue, and this is something that the drafting committee really strove for this year, is to pick the right rule. Pam has gone into as much detail as possible in an hour about the differences in the rules. And so rather than, excuse me, pick your favorite rule and try to make it fit, understand all of the details about each of the rules, and pick the one that should be the most perfect fit. Pick the right rule.
Good point. You know, one of the things I've always said too is that IncoTerms are a great starting point. And by that I mean that the term really obviously can't stand on its own, and the devil is in the details. You know, the terms really need to be easily understood. And in our industry, it's not just understood between the buyer and the seller, but multiple parties. So the insurance provider, the claims adjuster, a lender, the freight forwarder. Is that an area where you see improvement still needs to be made as far as the detail in items like location, address, and things like that?
Well, as Pam mentioned, naming that point and place is so crucial because oftentimes the point and place can be many, many different places around the world. So it's really crucial to get that right. And another thing also mentioned is be sure to say if it's 2020 or possibly clients are still working under agreements made back in 2010. So kind of in this transition period, really important to name those things. Another comment too, and that has to do with those water rules. The way the water rules are spelled out in the book, it says rules for sea and inland waterway transport. But in most cases, particularly with containers, small break bulk shipments and so forth, they really are not appropriate. So even though you could interpret the book to say that you must use them, you don't have to use them. They are more often than not inappropriate for your water shipments.
Great, good points. Well, I left the slide up here on PLS's other service offerings, and just in the short amount of time we have left, can you kind of briefly describe how a half-day or full-day webinar seminar on IncoTerms would go for those that might be interested?
I think one of the main differences between the longer courses is the interactivity. We prepare case studies. If it's a general presentation, then they're more or less general case studies. If it's for a specific client, then we can tailor those case studies to their particular company and their particular needs. So that's the main difference. When we have more time, we can go into much more detail and have it much more interactive.
Great. Well, we look forward to hearing from both of you in the future. And once again, I thank you for joining and for helping us out here. And I think covering a ton in the short amount of time that we did record this. So with all that's going on, I think for all those in the audience, I want to, all you to pat yourselves on the back for being a vital part of our supply chain. And I know with all of this help that logistics professionals provide, we'll get through all the challenges surrounding us now. And again, just a reminder for everybody to circle back to your Roanoke rep with any questions. And glad we could help out and make this presentation work. So again, Cheryl and Pam, we thank you again. And certainly for those that do have any questions, your contact information, Pam and Cheryl, is up here, as well as mine. And thanks for making it possible today.
Thank you, Rick.